Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar bears remain in control as the downside pressure persists, driven by a stronger US dollar, which now reaches its highest level since November 2022 of 109.95, following a robust US jobs report on Friday. The Labour Department reported 265,000 jobs added in December, surpassing the forecast around 100,000, with the employment rate dropping to 4.1%. This stronger than expected job growth has heightened speculation that the Federal Reserve will move cautiously on rate cuts in 2025 amidst inflation concerns, and now only view one 25 base point rate cut for this year from the US Federal Reserve. So turning to the technicals, as the market slides further, looks towards the support area of around 65. We are somewhat oversold. The MACD, however, has not followed this current fall. Nevertheless, let's see if the bulls can respond around that 65 level and take the market back towards the region of 61.5 to 62 cents. For the euro, the bears continue to weigh on the market and now look towards the region of 102.05 that may extend on to 101.45. From there, we may see a bounce due to the fact that the market is somewhat getting close to oversold and the ADX is not as strong in terms of a bull trend. So if we do see a bounce from 101.45 to 55, we could see a rise up to 102.50 to 102.95. Turning to dollar yen, the bullish trek has now hit a brick wall. The reason behind that saying is because of the bearish engulfing candle or an outside range day now looks towards the support region of 156.70. A break there would give further scope and see a move down towards 153. Given the topside rejection, any moves above 158 should not sustain. Turning to sterling, since rejecting that topside level or the broad downtrend, the market is now fallen into a very heavy bearish bias, and behind that could see a move now towards the region of 120.80 or maybe down to 120.35 before any turnaround. Reason behind that is the ADX is a little bit stronger in terms of trend compared to some of the other markets, and therefore that does weigh, and also the market's heaviness given the candles in the last 5 consecutive days. Turning to commodities, gold still remains somewhat bullish as it looks towards its target of 2,700 that may extend on to 2,800 or even with the broader call this year of 3,000. And in light of this pattern, any pullback is likely to be shallow. Bargain hunters are no doubt lurking around the region of 2,668 to 75. With oil exceeding its target of $74 a barrel, it now rallies on back to a point last seen in September, October. That is around $78 a barrel. In light of this blow off top, I am neutral given the fact that the $74 target was reached, and therefore now time to sit out and see how this market plays towards the top side. Bit of divergence here, an overheated trend could see a reversal quite soon. Well, that's a wrap. Thank you for joining me. And as always, look out for the interest rate report, and I hope you enjoy the great start to the new week.